why do I dive so deeply about this data? Because very importantly, the break-even price is something people overlook when it happens in 2018. Topic number one, where we talk about the upcoming launches in 2022. So over here, we see a Singapore map that is very growing bigger and bigger, of course, okay? And over here, we see two different drop pins. So these two different drop pins here shows in light blue, en-bloc collective sales, and dark blue by way of government land sales, okay? So at the bottom over here, we see three different colors. In orange is actually core central region of Singapore, light blue, rest of central region Singapore, and also navy blue, outside central region, okay? And these are all denoted in this district number, all right? So let's look at the core central region. What we have actually 5 launches on 5 land bidding that happens here, and out of which you saw that is basically 4 light blues, which means we have 4 by way of collective sale. All right, so people who are buying into so-called old development, they usually buy here, and that's where they actually enjoy to be the en-bloc beneficiary. All right, so in this particular 2022, we see 5 launches happening here, and out of which 4 are by way of private acquisition and 1 by government land sale, which is in Marina View. And then next, we have 12 in the rest of central region, okay? So under the government land sales, what we have is in Slim Barrack parcel area, we have 2A and B, Pine Grove parcel A as well. In the northern side, we have Ang Mo Kio Avenue 1, Northumberland Road in Farrer Park, and also in the eastern side of Singapore, we have 2 of them, which is Jalan Tembusu near Katong, and also Daman Road itself, all right? So in the way of en bloc, what we have is at Lorong N, Telok Kurau, Jiliang Gardens, Yuan Sing Mansion, and also Flynn Park at Pasir Panjang. All right. So a lot of activities happening here in the rest of central region area. We have 12, double the times of core central region. And then we also have in the outside central region, what we have is 6 of them, and all are by way of government land sales. So you could realize that if people are telling you that certain product in the outside central region may go for en bloc, sometimes, by data perspective, we can see that whether it makes sense or not, all right? So in this instance, 2022 launches that are happening here, we do not see any en bloc that happen within this vicinity. So what we have here, by way of government land sales, Dairy Farm Walk, Lentor Hills, Group Parcel A and B, and also the Lentor Central as well. So Lentor Central basically is a mixed-use development on top of the, just beside the MRT train station, all right? And also in the eastern side, we have the Tanah Merah parcel, which is a mixed-use development next to Tanah Merah MRT, the last 4 of them, so to speak, all right? So next, we also want to look into the reserve list as well. So what do we have in the reserve list? In this instance, we have 6 so-called products under the reserve list, and these reserve lists are by way of demand. That means the government actually have a reserve price bid for this land only if the land bid is being triggered, okay, by way of submitting your bid. This land will then be awarded, all right? So interestingly, in the so-called near core central region Singapore, it's in the rest of central region, we have Kampong Bugis and Woodlands Avenue 2 all the way in the north. These 2 are classified under the white side, okay? So white side, as you know, is one of the wild card that is not the most expensive land plot that we see. So in this instance, just to give you some reference point, Pasir Ris 8 is a white side, and that's why price shoot up close or almost above $2,000 per square foot, right? Okay, so these 2 land, do look out for it. And then of course the rest of the land we see here, one is at Lentor Garden. Very interestingly, Lentor area we have 4 sites, out of which 1 is under the reserve list, 3 is under the confirmed list. And of course, in the western side of Singapore, we also have 3 parcels as well. Hillview Rise parcel just below Midwood. We also have the Bukit Timah link. This is just behind the link at, of course, the integrated video transport hub. All right, and also Pine Grove parcel B, which is beside the parcel A altogether. Okay, so next thing, what we see is basically the cost of land, and this is very important where I share with you the comparison of land cost here. In the left axis, what we have is the per square foot per plot ratio of the land cost, okay? And at the bottom axis itself, what we see is 3 different regions: core central region, rest of central region, and outside central region. These are separated in these 3 segments. And then of course, we look at the product that are under by way of en bloc, double night leasehold, freehold, or government land sales. Okay, so under the core central region area, what we see we actually have the land cost in terms of per square foot per plot ratio. Just get it right here. This is not the launch price. This is just the land cost. Okay, we're talking as low as $1,115 per square foot at Mount Emily, all the way to as high as 36 Shelford, $1,723 per square foot per plot ratio. And the average so-called land cost here works out to be 1,384 per square foot. Okay, so very importantly, when we buy, we do not want to overspend and pay over premium. So to me, I always work back on the land cost. And if you see the land cost averaging at 1,384, we should try to buy anything within this and below. All right. So next thing we then talk about in the rest of Central region, what we have, these are the land costs that we see as low as $678 per square foot in Geylang. In fact, the two lowest en bloc were done in Geylang, one at 678, one at 861, and then all the way as high as 13818 per square foot at 18 to 22 Yu Xiang Road itself. Okay, and the average works out to be $1,044 per square foot per plot ratio. In fact, this is also the land cost that we see back in 3 years ago or so in this region. And then in the outside Central region, what we have from a $930 per square foot per plot ratio all the way to 1,204, and what we're looking at the average is 1,046. So in this instance, you can see that the OCR prices are almost identical, or if not higher by $2 to the rest of Central region. So with this data right in your face, I guess you more or less know where to put your focus on just the topic number one of the fresh opportunities 2022. Okay, so next thing, what's so important here, we then need to use that land cost to add together with the cost of construction to then derive the future so-called launch price. Because what I'm going to guide you here today is to know whether your financial position, okay, some people say they want to wait, want to know whether they will be priced out of the market once this development launch given the big price. Okay, so you are able to work 1 to 2 years re-engineering what are the so-called launch price, whether they are in relevance to your so-called income capacity. All right, so in this instance, what we're looking at is an example that we learn how to work out developers break-even price. Okay, so example here is this product called Gem Residences in Toa Payoh. Okay, and this land was actually awarded or acquired back in 2015, and the land cost in terms of per square foot per plot ratio worked out to be $755. And using this price, we also add on the construction at $350 per square foot. Of course, right now construction cost has increased, but of course I just want to put it at this figure so that we will not change the dynamic of the formula here. Okay, so in this instance, we will then use the land cost plus the construction cost, and we call it the developer baseline. And using this baseline, we are times 30%. Okay, and this 30% actually works out to be developers' expenses along with profit margin. Okay, so these two components added into it. So this 30% pay for what? We are looking at administrative expenses, staff costs, office rent, sales and marketing expenses of the developer, show flat building costs, commission to the agencies, advertising, promotion, lawyers' fees, financing towards the banks as well, and also finally the profit margin. Okay, so over here, why do I dive so deeply about this data? Because very importantly, the break-even price is something people overlook when it happens in 2018. So what happens in 2018? The number of en bloc that happened within 2016, 2017, and 2018 actually created a lot of replenishment happening from 2018 all the way to even this year. Okay, so what happened is that in between there was a cooling measures that was introduced on the 5th of July. And because of that, developer actually dropped price to their break-even price. So this is very important because I want you to know that this is your margin of safety. In the event if the developer were to drop price, this is how low it could go. Okay, so in this instance, we look at numbers here: land cost 755, construction cost 350, along with the 30% of the two land costs and construction costs add together, we get 331. All right, and we then have the estimated launch price of 1436. Okay, so if I want to work out the break-even price, how would I know what to do? So in this instance, we need to find out the profit margin, which is the variable here. Okay, so in this instance, we look at how developers' margin has been suppressed from 2013 onwards. So it was a very lucrative businesses as a developer since 2008, but it comes down after 8 cooling measures was introduced. And of course, in 2015, we are looking at about 10%. So we talk about construction costs, plus 350 instead of times 30%, because 30% includes 10% of profit margin. Right now I take away the profit margin, I times 20%, I work out the break-even price of 1326. Okay, so this is important for you to know so you can measure again your margin of safety. As much as we want to optimize, we also want to know our risk as well. So next, we then talk about the residential launch price. Is it true what I just illustrated to you? So over here, we talk about the formula again, land cost per square foot per plot ratio plus construction cost times 30%, which is developers' expenses and margin. We will work out the per square foot. Okay. So in this instance, we use an example here called Clermont, where land cost was 778 per square foot, construction cost 350, with times 30% of a baseline, we actually get 1479. All right. And with this, we then look at developer launch price back then. UOL actually launched this project called Clermont in November 28, 2020, year 2020, and this price was 1475 per square foot. So it's just $4 off. All right. So these are marginal difference, but what I want to showcase to you here is that this per square foot is very important to basically derive your future entry price. All right. So we don't want to be priced out of the market. And next thing, this per square foot that we work out on an average basis, these are in direct reference to the 3-bedroom on the middle floor. So for example, there's a 40-story development. This is probably the 20th story of a 3-bedroom. Okay, so this is where you basically benchmark your per square foot to. Of course, if it's smaller, 2-bedroom, 1-bedroom, the economic, due to the economic of scale, it will definitely become higher in terms of per square foot. All right. So next thing, what if it's integrated development? Then how is the equation different? So when you talk about the land cost plus construction cost plus the baseline without the profit, okay, and then we will add in a 30% premium. Okay, so in this instance, we are talking about Pasir Ris 8 here, land cost of 684 per square foot per plot ratio, construction cost 350, 20% baseline is 207, plus a 30% premium that we are adding in here due to the complexity of the building construction, and also an asset class that is premium where you have everything under one roof. So in these instances, per square foot will add up to 1613. And this is the launch price of the development. In fact, it was only open for one weekend and then it closed shop, right? Okay. So average here, you can see that the per square foot was 1624 per square foot. And this is the 3-bedroom prices. Of course, we learned that it went as high as $2,000 per square foot from the media, and price actually increased 6 times throughout that 12 hours launch period. All right. So this is very important for you, because once you know this, again, you are able to measure based on your financial position. So we then talk about the land cost right now to the launch price of what we've seen just now, and how does it look like? Okay, again, left side, left axis is the PSF, okay, and we compare it in two perspectives, per square foot per plot ratio to the future per square foot in terms of launch price, and these are the same products that you see just now in the same chart. So in this instance, these are the launch price in terms of land cost, and these are the future launch price. Okay, so light blue itself is the average launch price in each region this year. Okay, so what's so important here, if you look at these data, right? People focus on the $2,000 per square foot big numbers. So what we see in the core central region and the outside central region, prices are very close, $200 per square foot differences only. And that's where people say that it doesn't make sense, might as well go and buy core central region, right? Okay, so this is something I do not want you to see, because that's what average investors see. I want you to know that we have to dive deeper and look at the type of property here, the class of the property here. So in this instance, outside central region, we actually have, out of the 4 launch that's going to happen this year, 3 of them are under integrated development asset class. So we learned that integrated development has an additional 30% premium, right? So hence the prices actually goes up all the way to 2221 per square foot on the average basis. Okay, out of 4, 3 of it is integrated. Whereas in the core central region, out of 7, we only have 2 that falls under the integrated development or not mixed use development category. All right, but what's so important to focus here is actually the rest of central region pricing. All right, because at the end of the day, with the new so-called cooling measure where TDSR is dropped by 5 percentage points, so with that, you want to know that what we want to focus on is the accessibility of the buyer based on quantum sensitivity. So what it means is that right now we want to know that given the per square foot so-called lower entry price, this will allow the buyer to take up an amount of loan that most average Singaporean can buy from you in the near future. You don't want to price them out of the market as well when you sell or when you exit your property. So this is very important, okay? And especially so, rest of Central Region area are way below the two so-called segment that we see, okay?